Hey gang, it's Dave with Systematic Investors Group coming to you after the market close in the evening on September the 8th, 2022. So gang, I just wanted to update from my last video, which was, oh geez, I don't even remember. It was probably, oh, it was somewhere in this, well, I know where it was on the chart anyway. So let's just kind of zoom into where we were on the chart. So at the time, we were coming into this area. Now I'm looking at a daily chart of the S&P futures. If you can't chart this, you can follow along on the SPY, which is basically doing the same thing. I just like watching the S&P futures because they chart a little bit better, right, with the 24-hour session, etc. So, gang, so this is where we were at the time. We were coming into this area of support, which is a 95 EMA on the S&P 500 chart, on the futures chart. And at the time, what I was saying is what I was hoping for. I mean, you know, I'm a systematic trader, so you can't really predict the market. But what I do is I kind of do some technical analysis just to kind of see where we are in the kind of the market cycle, if you will. So we were coming into this area of there was a bit of confluence here with some of these horizontal support areas and the 95 period EMA. And what I was expecting was a possible hold in this area, and a bounce and a break of this trend line to see if we're going to resume the sort of bull market, if we can break out of this larger trend channel, right? Because we're just trading downwards in this down channel, this trend channel here. So what ended up happening was the trade started to kind of work out. My systems all got back in the market, all of my long side systems. I think I was running three strategies, and essentially we started to bounce and the structure looked okay. And then of course the Fed came out and we had this huge, I don't know, what was it, 3.5% down day. And I was like, uh-oh, that doesn't look good. So, I mean, these kind of things are going to happen, but if we kind of zoom out to what, like, to the structure itself of the chart. Now I'm just going structurally, like, it wasn't fun. I'll be honest with you. It was not fun coming out of a drawdown, which we had when the markets turned in our strategies. We were coming out of a drawdown, and then, you know, we had a nice little run up here and then going back into another drawdown. That was not, you know, something that I wanted to experience, you know, when we haven't recovered all of our losses from the previous drawdown, from the previous, you know, equity high, or high watermark rather. So essentially, though, if you look at the actual market, regardless of what the Fed did, and they whacked the market down here, the actual structure of the market hasn't changed much from the last video. So instead of, you know, finding support and you know, bouncing here and doing what I was hoping would happen, now we came into this lower level of support, which is kind of a confluence area between these, this former kind of breakout of this bottoming base pattern. And this bottoming base pattern was off of this positive divergence, right? There was a positive momentum divergence off of these lows, and then we had this little basing pattern, kind of like a little double bottom, or a little, like, you know, basing pattern, and then we broke out, and we're actually now just coming back in and testing that area. So if you notice that area of support, there's also a confluence of, you know, this trend line here, right, where this trend line kind of lines up loosely from these bottoms off of the low. Now, I'm not saying that this is going to hold and that we're going to break out, but what I am saying is, you know, the structure is still in place until this area fails and we come down and we break those lows. So, you know, you've got quite a bit of distance to come down and retest these lows, and still, you know, maintain this kind of structure of short-term higher highs and higher lows. So, I mean, we've got to be very careful here. The pressure really is to the downside. If you look at, you know, where the big bars are, whenever we have a big kind of day, they're to the downside still, right? And the market structure on the larger downtrend, and this downtrend channel is still, lower highs and lower lows. So we just have this really intermediate structure where we can be a little bit positive. Now, this is what I'm going to be looking for. My strategies took a little bit more of a drawdown, but they are they've lightened up a lot. I've only got a couple positions on right now, and essentially what I'm looking for is to see if this area is going to hold, if this structure is going to hold, and then we come up and we break this top trend line. Unless we break this top trend line and get above these highs, I'm not going to get super bullish. Okay, that's just the reality of it. That's just the reality of what the our market proxy here is telling us. If we come down here and we break, these lows here, well, that's going to get me bearish. If we break out of this down channel, of course, we could just keep bouncing around in this down channel, but I mean, I think we've been kind of doing this long enough that something's going to have to start moving in order to get excited one way or the other. So I'm looking for this structure to hold and break through, but knowing that anything can happen in the markets. If we break this level and we come down and retest the lows, we're still fairly bearish. Now, having said that, we have some other things coming into play here, and some of those things are seasonality. So if you look at the time of year that we are in, sorry gang, I'm just trying to shrink this chart again. Oh, here we go. Okay, so before we jump into that, let me just look at the 60-minute chart. So the 60-minute chart here in the middle, you can see it's kind of bottomed a little bit and it's starting to look positive on the 60-minute chart. So again, if this structure holds, great. We are still, more bearish than we are bullish in terms of the overall chart pattern. But looking at this area here, if we can break out of this top trend line, then we can probably get back on the long side. And the reason why I'm looking at that is if you look at the seasonal average chart, so that's this red line here. This is like the average of the S&P futures over the last, let's say, 20 years, right? So if you look at that, we usually bottom sometime in, from the middle of September to the middle of October, right? So we're getting into a period of time now where, we could start to bottom in October, possibly. We're getting close to that time period. And then, the market usually, I mean, this isn't necessarily a usual year, but the market will usually start to trend into the Christmas rally. So there is some seasonality coming up, so we have to kind of be cognizant of that and be aware that that's in play as well. My systems right now, my strategies right now are pretty light. I'm just going to actually just jump on my other computer right here, and let's just have a quick look. So sorry, you can't see that screen because it's actually on another computer. So let's see, I'm trading the RSI 2, for example. I've got 4 positions on, and they are all negative. I'm trading the supercharged momentum trend. That only has 1 position on. It's up about 5.5%. And then I'm trading the squeeze pause sprint for the S&P 1500. And it is the portfolio is just slightly negative. I've got 1 position that's up almost 12%, and my lowest position is down about 7%. And I've got, how many positions do I have? I've got 13 positions on. So those 3 strategies are still running. They're fairly light. They're not, they're obviously not fully loaded. So let's see what happens here in the market. If we can get some upside movement, the strategies will recover a little bit, and that'll be very nice. So again, you've got, this potential market structure coming into play. As long as we don't break this area of support. If we break this area of support, I would say, what? We're probably going to come down and test the lows or even the bottom of this channel in the short term. If we break this, this kind of area that's turning into what would be what I would call a potential pivot point. Okay, so let's just take a quick look at the NASDAQ futures and see if anything looks different. I mean, the structure looks pretty much the same. We had a kind of trend line. I mean, a loose trend line here. It went through it a little bit, and it looks like the market's trying to put in a pivot, but recognizing we do have some overhead resistance. And then if we look at the Dow futures, the structure looks very similar, right? We came through the trend line a bit. It looks like we're trying to put in a pivot area here. And by pivot, I mean like this is a pivot area, right, where it bounces. This is a pivot area where it's sold. So it looks like the market is trying to put in a pivot area here. You've got a W pattern, buy pattern off of the short-term RSI 5. But, the MACD momentum is still negative. So let's look at the VIX quickly. So the VIX kind of spiked. It didn't actually spike that high, and it looks like it's ready to roll over again, which bodes well for the market. And then I'm just looking to see the USD CAD because they do run a little bit opposite each other from time to time, I've noticed. So if you look at the USD CAD, looks like it's topped in the near term. Oh, there was something else I wanted to show you. For those that are maybe interested in technical analysis, let's just jump back to the daily chart. And there's just one little thing I wanted to show you here. This was another data point I was looking at. As a technical analyst, if I put my technical analyst hat on just for a quick second here, I do like Fibonacci retracements. So if you look at this intermediate low to this intermediate high, we hit this zone here, which is a 50 to a 61.8% retracement, and that's where we found support. And that's where you would expect to find support off of an intermediate move. So that was also another interesting data point that I was looking at. Now, having said that, if we just bounce up back into resistance and roll over, you can just forget about anything I've said about the long side of the market. So what I'd like to see, if we can get back on the being kind of more bullish and being a bull on the long side of the market, is really to break this upper trend line and put in structural low. So this is your lower high, and then put in your higher low, and then put in a higher high up here somewhere. Okay, so that's kind of what I'm looking at. I hope that all makes sense, gang. I know this was a little bit this video was very impromptu, and unfortunately it wasn't super well thought out, but the main thought I wanted to convey was that we were looking at this area as support, but the market structure, even though we had a bit of a sell-off from where we were hoping to find support before, the actual market structure hasn't changed much. So nothing has really changed from the last analysis. It's just let's see where we're going to go from here. The next time I turn on the recording to make another recording, we'll see if we're broken above here, or if we're down here and down towards this trend channel at some point. So I mean, technically you've got a 50-50 chance of going either way. So let's see what happens. Gang, thanks for listening. We're about 13 and a half minutes into this video. If you have any questions, feel free to email me. If you have any questions about systematic trading, I'm back in strategy development mode. I've been working on some dual momentum rotation strategies. I've been working on some mean reversion strategies, and I'm just kind of in brainstorming mode, where I'm just kind of throwing out a bunch of ideas, and then I'm going to kind of dig deeper into the strategies. So hopefully in the next couple of weeks you'll be hearing something from me about these strategies, if any of them actually make the cut. So gang, good systematic trading. I'll look forward to seeing you at an upcoming meeting or at the next update. Bye for now.